You're listening to The Pilot's Portfolio, formerly called the Pilot Money Podcast. To learn more about the name change, join us in Season 2.
I know in his question, he specifically asked about how to structure his business. But I think what he really wants to know is how to handle the looming tax bill, right? So what can he do to bring his taxable income lower so that he can keep more of what he's earned?
You're listening to the Pilot Money Podcast, the show dedicated to guiding professional pilots towards a future of financial success and stability. Fly along with your host, Timothy P. Pope, as he provides financial planning insights and answers to your burning questions and dives into real-life stories from fellow pilots who share their successes and cautionary tales. The Pilot Money Podcast takes off now.
Welcome aboard, ladies and gentlemen. This is the Pilot Money Podcast, and my name is Timothy P. Pope. I'm a certified financial planner specializing in the planning needs of the professional pilot. So that's both the airline side of the house and business aviation side of the house. So today is a solo episode, and it's one that I'm excited about because it's a question and answer episode. We love to hear from you, the pilot at home. So what do you have going on that you would like to get our thoughts? Joining me today in the studio is Lacey. She's going to help tee up some of these questions. And so let's jump right in. Lacey, what do we have in terms of questions?
Thank you, Tim. All right. We have some questions from Steven. He's actually written 3 questions.
Let's just break them up. We'll do them one by one and see how that goes.
All right. Hi, Tim. I received your name from Dylan and Max on the 21.5 show. I'm a corporate pilot in the New York City area and have been since I graduated Embry-Riddle in 2012. 1. This year, with the airlines hiring like they are, it created a void in the business aviation side of the house, leaving a lot of corporate planes uncrewed at times. In combination with my full-time job, I've been able to do pilot contract work on the side, which will result in a decent amount of 1099 income. I was looking for help on how to structure myself before the end of the year to help with the looming tax bill. I do not have an LLC. I know you may not be a tax preparer, so maybe guidance to someone who might be able to assist.
Thank you, Stephen, for this question. And by the way, shout out to Max and Dylan on the 21.5 show. If you're a professional pilot and you are not listening to the 21.5 show, you should be. So essentially, Stephen's question is, look, I've got a full-time job. I did a side hustle. It's doing well. What can I do to lower that tax bill? So this question really applies to all pilots with a side hustle, whether you're an airline guy or you're in business aviation, whether your side hustle is flying or whether it's something else. So I know in his question, he specifically asked about how to structure his business, and we will provide some thoughts around that. But I think what he really wants to know is how to handle the looming tax bill, right? So what can he do to bring his taxable income lower so that he can keep more of what he's earned? So number one, I think this is some low-hanging fruit, but what I'd say is make sure your expenses are appropriately categorized and accounted for. So you are spending money to make that side hustle work, right? So I don't know everything that goes into contract flying, but how are you getting to the airplane? Are you airlining it? Are you buying tickets on the airlines to get yourself in position? And then are you buying a ticket on the airlines to get yourself home after that contract trip? Are you staying in hotels and for the duration of the trip, and who's paying for that? Are you driving to and from your home airport or somebody else's hangar? And so, there's gas and mileage that have to be considered. How are you picking up the trips? Are they all word of mouth, or are you using any software that you have to pay a subscription for so you're notified about trips or things like that? When you're at home, do you have a home office that you work out of for this work? Did you pay for any types of training out of pocket so you could successfully do your contract work? So that is going to be your first step, is to make sure that all of your expenses are appropriately categorized and accounted for to help reduce some of your gross income and to reduce that number so you're left with a smaller net income number. The other thing that you can do is you can actually set up a retirement account for the side hustle. So if you listen to episode 3, where we highlight the types of retirement accounts and their 2024 contribution limits, so go listen to that for all of them that are out there. But when I hear his question, there's 2 retirement accounts that come to mind, primarily the SEP IRA and the individual 401k. And the reason they come to mind is because these 2 accounts tend to have higher contribution limits and the ability to put employer money into the plan. Now, remember, for Steven's side hustle, he's going to wear both hats, the employer hat and the employee hat. And so we get this email at the end of 2023, the maximum contribution limit for all of his defined contribution plans, so that would be things like 401ks, is going to be $66,000. So the question that I have for Steven is, did you max out your 401k for your day job, your regular corporate gig? Now, if Steven says, yes, he maxed it out, let's assume also that his employer was gracious and that they gave him a dollar for dollar match. So in 2023, let's say Steven put in $22,500 and his employer also matched $22,500. That leaves another $21,000 until he reaches the $66,000 limit. And so with that, we can look at the SEP to help try to satisfy some of that money. So let's say he maxed out his employer plan for his day job. Now, how much money did he actually make in terms of his net self-employment income with the side hustle? So he says he has a looming tax bill. His contract flying did well. Did he clear an additional $100,000 throughout the year in 2023? If he did, then all of a sudden the SEP IRA is looking fairly attractive. Because for self-employed individuals, you can put away up to 25% of your net self-employment income, okay, into the SEP. And remember, with the SEP, all of those contributions are going to come from the employer side of the equation. So let's say he cleared an additional $100,000 up to 25%. Hey, that's another $25,000. But if he maxed out his 401k and his employer gave him a dollar for dollar match, that's where he could save that $21,000. So it's going to be a little bit less than the hypothetical 25%, but still, he's able to meet the overall $66,000 limit. There's some questions that I don't know the answer to. Did he max out his daytime 401k? What was the employer match? What was his net self-employment income? But you can quickly see how the SEP can help to lower that tax bill. If we ask the question, hey, Steven, did you max out your corporate 401k? And he says no, then we might start thinking about the individual 401k or the solo 401k. So the interesting thing about this plan is, yes, you can make employer contributions to it, but you can also make salary deferrals in the individual 401k. And so Steven, as an employee, could make contributions as well. So let's say he put in $10,000 in his corporate 401k plan. Well, he has another $12,500 that he could do as an employee for his side hustle. And then he could also do some profit sharing, assuming that the individual 401k language allows for some profit sharing. He could do profit sharing. And so between the 2 401k plans could help get himself up to that $66,000 limit for 2023. And so those 2 come to mind. It's really going to depend on what he's done with his corporate gig in terms of his 401k, how much his employer matched or made contributions, and then what his net self-employment income is. But both of those plans could help lower his looming tax bill. You may say, hey, Tim, we're in 2024. Why are you talking about something that happened in 2023? Well, Steven will have the ability to create and fund either a SEP or a solo 401k up to the tax filing deadline, including the extensions, right? So plus extension. So that's the nice thing about being self-employed is, unlike you guys at the airlines or in business aviation, 12/31 is your magic date, right? That's when you have to have your employee contributions in by. But when you're self-employed, the law gives you a little bit more of time to figure out, hey, how profitable were you? And to fund it with some salary deferrals and then also any employer contributions that you're going to put in. So finishing up on the potential retirement plan solution there, the amount of self-employment income and his ability to max out his corporate plan, that's going to influence which account type would be most attractive for him. In this case, is it the SEP or the solo 401k? The other thing that I would have Stephen think about when he wants to know, hey, how can I lower the looming tax bill? And of course, we'd have this conversation with a tax preparer as well, but is exploring whether he should be treated as an S Corp. So, if he creates his LLC and then decides to elect to be treated as an S Corp. Now, I'm not sure if he can do this retroactively. I'm really not sure, so I wouldn't hang my hat on that. But if he's going to be continuing to do this kind of contract work in the future and on the side, then being taxed as an S Corp could be attractive because you can take a portion of his earnings as salary, so as ordinary income, and then he could take a portion of his earnings as a distribution. And typically, those distributions are going to have more favorable tax treatment. We think about being taxed like a qualified dividend versus your ordinary income bracket. So this might be really interesting or attractive if he's already maxing out the Social Security wage base in his day job. So in 2023, that was, around $160,000. In 2024, that goes up to $168,000 and change. So if he's already doing that on his day job, then why not? Well, he's not going to shoot himself in the foot from a Social Security perspective, but he can potentially save on taking some of this pay as distributions as opposed to just ordinary taxes there. So those are the things that I think about when I hear, hey, my side hustle is doing well. I've got a looming tax bill from 1099 income. What can we do about it? And it turns out there's a decent amount that you could do about it there. So that's all I've got for the first question. Lacey, what other questions does he have?
Question 2. With the airlines hiring and pilot contracts the way they are, I cannot ignore leaving corporate and switching to the airlines any longer. But being the sole provider for a family of 4, I would like to explore opportunities, if any, how to survive the first plus year or so at an airline with the reduced pay.
We get this question all the time. And quite frankly, sometimes guys just want to know that they're seeing the airline pay, they're seeing the airline contracts, they've got their thing going in business aviation. I mean, he said he's been doing it since 2012. So that's 12 years that he's been flying business aviation. So sometimes they want to know, hey, what is the opportunity cost? Like, what am I leaving up on the table? Number one. Number two, they might want to know, hey, if I stay in business aviation, can I hit my financial goals? So at the end of the day, we get this question all the time. And coming down to first year pay. So if he's knocking down $250,000 or more on his current gig, that could be a really tough move to jump down to about $100,000 when he's moving to the majors. So we will look at the budget for the family. We'll look at access to cash. We'll look at cash savings and then also non-qualified investment accounts that may be able to help with the transition. Also, we'll take a look at a strategic use of credit if necessary. And that's not necessarily credit cards, but any other credit products that he may have access to or we think he should have access to. Because at the end of the day, I mean, I'm probably I don't know Stephen's age, but if he graduated in 2012, he's probably between, 34, 35 years old. And so when you think about a 30-year career at a major airline, that's a lot in terms of lifetime career earnings. And so we certainly will look at a use of strategic credit as an investment for him to make that jump. Also, he mentioned a family of 4. So I'm going to assume, hey, that's Stephen, his wife, and then 2 kiddos. This goes back to question number 1 with the retirement plan solution. Stephen, did your wife help out with any of your contracting work at all? Did she field calls? Did she manage your schedule? Did she book hotels and flights for you or anything like that? And if so, how much did she earn doing that? And should she have a retirement account as well? That would be something else. Just kind of going back real quick to question number 1 about reducing his looming tax bill. That could be another straw in the hat, if you will, or another tool in the toolbox to help reduce that bill. But back to question 2, absolutely, we look at a number of things to help folks survive the first year at a major airline. What else we got?
Question 3. Lastly, retirement forecasting. If I stay corporate and continue with my current savings/401k plan that will result in X amount, could you provide a scenario where if I switch to the airlines, what my potential airline retirement investment could be? I really appreciate your time, Tim, and look forward to hearing from you.
Awesome. So this last one, this is what we do. This is absolutely what we do. We will compare your current circumstance and then ride that out to retirement. We'll compare if you went to a major airline and what that would be. And quite frankly, the huge benefit that these new contracts have is just the gigantic amount of non-elective retirement contributions. So most majors are now at 17% and scheduled to go up to 18% by time 2026. And then you've got the market-based cash balance plan once you start getting some spill cash. So we will look at that. Now we will, because aviation is aviation, okay? So when we make these projections, they will be conservative in nature. We're not assuming that you're upgrading at the first available opportunity. We'll have you in the right seat for some time and then upgrade you from there. And then also with the investment returns, we like to keep those conservative as well. So, I think that we kind of build just a very reasonable average case. And then if you fly more or if you upgrade sooner and things like that, then that's just better than what we project. But at the end of the day, the answer is yes, we can and we do make these projections and compare them to what you're doing right now. And we understand this is all about, hey, can I hit my financial goals? Can I hit my retirement? The choice is going to be back to Stephen and his family. Hey, do we want to pursue airline flying, or do we just really love business aviation and we're going to stay here because, with this analysis, we understand that we can hit our goals. So that's it for question number 3. I think the short answer is yes, that's what we do, right? And I really appreciate Stephen writing this. It's funny. So Stephen sent this email in. I responded to him with a few bullet points on, hey, here are some of the things that I would think about. And then he scheduled an appointment for us to talk. So I'm actually recording this before Stephen and I are actually able to sit down and go through all of these questions. So for me to get answers. So none of this is advice for him to take. These are just things that I would be thinking about. And these would be questions that I'm going to be asking him when we sit down. So we'll sit down, we'll talk about these things and how we can help professional pilots with their financial planning. And then if Stephen needs a refresher on our conversation, he can come back and listen to episode 5. So Stephen, thanks for the question. And for the pilot at home, what do you have going on that you want our thoughts on? You can send us an email at pilotmoneypodcast@ceterainvestors.com. That's pilotmoneypodcast@CETERA investors.com. So thanks, Stephen, for the question. Thank you guys for following along. Thanks, Lacey, for jumping in the studio and helping us with these. And we will see you on the next episode.
Thank you for joining this episode of Pilot's Portfolio. If you found this information helpful, spread the word and share it with a pilot buddy. Or if you have questions and there's something that you would like to hear discussed on the show, send us an email. You can find the address in the show notes. For those of you who are ready to learn how we help professional pilots with their financial planning needs, schedule an appointment. Until next time, keep the shiny side up, and we'll see you on the next episode.
Pilot's Portfolio is hosted by Timothy P. Pope. Timothy P. Pope is principal owner of 360 Aviation Advisors. 360 Aviation Advisors is a registered investment advisory firm regulated by the state of North Carolina in accordance and compliance to the securities laws and regulations. 360 Aviation Advisors does not render or offer to render personalized investment or tax advice through Pilot's Portfolio. The information provided is for informational purposes only and may not be suitable for all investors and does not constitute financial, tax, investment, or legal advice. All investments involve a degree of risk, including the risk of loss.